Labyrinth, come in. Labyrinth, come in. Labyrinth, come in.
I predict an earthquake up in here. Say yeah. I predict an earthquake up in here. Cause we throw bombs on it, throw bombs on it. Just smash something, yes, march for me. Hey, yes. We can make an earthquake up in here. We can make an earthquake up in here.
Remember what Mr. Halloran said? It's just like pictures in a book, Candy. It isn't real.
Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market Cipher. So I apologize for the delay in releasing a new video. I have had other things going on and have been unable to put a video out. So there is quite a bit to catch up on. We have just had a monthly close, and we have also just broken down below this triangle pattern. So let's start here on the monthly time frame. As mentioned, we recently opened this new monthly candle in May, and the previous monthly candle had quite a bad close down at 37,670, and it did close lower than these previous lows. We are still in this parallel channel with these blue lines. The bottom of this channel is currently at around 35,000. We can see on the monthly that we did get rejected from this order block coming from this red candle in an uptrend. These order blocks are areas of supply and demand. They become of interest later on when we interact with those levels and can act as support or resistance. So we did get an initial dead cat bounce here. We got rejected from this monthly order block and we have been pushed back down. And we've now also re-lost that golden pocket area. Looking at this retracement, taking the fib from the 29k low to the 69k high. So things are looking bearish, but we are still above this channel for the time being. At the stochastic RSI, we are all the way down at a 3 reading. And this is typical of bear markets, staying below this 20 level on the stochastic RSI on the monthly for extended period of time. And just looking back at the previous 2 bear markets here, I've just got it marked out once we crossed that 20 reading on the stochastic RSI and once we reclaimed it. And these pretty much mark out the bear markets here. We can see we have done that with our current price action, and we did enter this zone at the start of the year. The previous one lasted for approximately a year. We could spend the whole year below this 20 level on the stochastic RSI as we play out the rest of this bear market. Looking at the RSI, we're currently at a 51 reading. And looking back at the previous 2 bear market bottoms here, we can see we pretty much bottomed out at around a 44 reading on the monthly RSI. So there is a little bit more to come if we are going to fall to similar levels as we did in previous bear market bottoms. And down to the 2-week time frame now. We also have these 2-week order blocks here from both of these red candles in an uptrend. We can see that 2-week order block also acted as resistance on this dead cat bounce. We got pushed back down. Looks like we're coming towards this lower order block, which is between around 35.9k and 33.1k. You can also see on this bounce from the 33k low that we came up to this 382 level, doing the retracement from the top here at 69k down to that 33k level. And when we do get rejected off the 382 level, it can indicate a continuation of the trend. And it does show weakness that we weren't able to get to the 0.5 fib level or even the golden pocket. So as shown in that intro, we do also have this triangle pattern drawn, and it's just connecting it from these 2 wicks here. We could possibly redraw this triangle using this blue line of support, as both of these touch points are quite close together, and it would be more valid alternating sides here with this as a touch point. This is the next touch point, and coming down to the next touch point where we might expect a bounce. But again, the bottom of that parallel channel is at 35k and also inside this order block. Looking at the VPVR now, the amount of volume traded at certain price levels, we see the biggest spike here at around 38.8k, and we were looking for this area to hold as support on this pullback. But for the time being, we are below that area. This is the 2-week candles, and we have until the end of the week before this candle closes. And we also see how this other spike here on the VPVR was the area where we got that resistance on the dead cat bounce. Looking at the stochastic RSI, we can see we got rejected off the 20 level here, the white dotted line on this dead cat bounce. And it's always good to make sure we get above this area on the stochastic RSI to give more confidence on the bounce that it is going to carry a bit more higher. And looking at the RSI, we are currently sitting at a 45 reading. I do have this blue box drawn in as it has been relevant during previous cycles. And just looking back at the last 2 cycles, we can see looking at the stochastic RSI, once we started this bear market in 2014, we saw the stochastic RSI did attempt to go higher, got to a 27 reading, but we pretty much spent that whole bear market below the 20 level. And we see that more clearly in the 2018 bear market. We spent the whole time on the 2-week stochastic RSI here below that 20 level. And once we reclaimed it, it gave us more confidence on a bigger bounce. But also looking at the RSI, this is where we have that blue box marked out. And I've just got these white dotted lines showing the zone where we are below this level on the RSI, which is between a 47 and a 46 reading. But we can see, looking at the previous cycles, once we broke below that level, it initiated one more final capitulation. Once we reclaim that level, indicated the start of the next bull run. Looking at the next bear market here, we can see we initially got support on this line. Just zooming in, we had these dead cat bounces off this line during this area. And then once we broke that level on the RSI, we had one more big capitulation from about 6K down to 3K. So around a 50% drop. Once we reclaim this level on the RSI, it initiated the next bull run. But we can see with our current price action here, we were bouncing off this level on the RSI several times. And these were the dead cat bounces we experienced. And as we can see, we are currently below this level on the RSI. We'll have to wait for this 2-week candle to close at the end of the week to see if we do actually close below this level. And if we do, it could indicate one more big capitulation coming. And down to the weekly time frame now. You can see we've got that same triangle drawn, but we also have this parallel channel. It has 3 touches on the top and 2 touches on the bottom here. And we're looking for this to act as support. Currently we are below this channel, but again, we have to wait for that weekly candle to close. To get back inside this channel and the triangle, we need to get back above 37,800. We do also have a fib retracement level here. This is taking it from the 33K low to the top here at 48K. And we can see the golden pocket lies between 38.3K and 38.8K. And this was a key area to try to bounce from on this pullback. And again, currently we're below that area, but we'll have to see how this weekly candle closes. Some of the weekly order blocks now drawn in blue here. We can see this order block acted as resistance. This is that 2-week order block in yellow. We also had that monthly order block around here. So all of those order blocks in the same area acted as resistance. We weren't able to reclaim them. And we did drop straight through this order block here, which was relevant on this bounce, acted as resistance. So we got no support on that order block. And we've been going down now for almost 6 weeks with 6 red candles in a row. The next weekly order block is down here at 35.2K to 34.8K, in line with that 2-week order block here in yellow, and also the bottom of that parallel channel in blue. And again, just showing that VPVR spike here, it's pretty much in line with this golden pocket. So we should have expected a bounce off this area. There was confluence with the golden pocket and the VPVR. But we have broken below it, and again we'll have to wait for this weekly candle to close. And looking at the weekly EMA ribbon now, we can see that it is starting to flip here with this yellow smaller moving average starting to cross the red higher moving average. And looking back at previous bear markets, as generally in bull markets we spend our whole time above this ribbon. But looking at the 2018 bear market here, we see that yellow moving average starting to come down into the other moving averages. And just zooming in, we see that it did cross here. The yellow crossed the red, and that was around this point in time. And around 7 weeks later, we had that one more big final capitulation. We can also see it in 2014 bear market here. Once this ribbon flipped, which was around this area, we had one more final capitulation down, and that was around a 50% drop from this level and bottomed out around 3 months after it crossed. And pulling up the stochastic RSI, we can see it's been coming down here since the top of this dead cat bounce. Looks like it has a bit more to go on it. The RSI is down at a 40 reading. And we can see on this dead cat bounce, we got resistance from this blue box. This area on the RSI is between a 58 reading and a 51 reading. And basically, as long as we're below this area and getting resistance, it mimics a continuation of a bear market. And we'll just look back at the previous bear markets here. We can see once we broke below this blue box here, it acted as resistance all the way down in the bear market. Once we reclaimed it, initiated the next bull market. And in 2018, a similar thing. Once we broke below it here, it acted as resistance all the way down in the bear market. Once we reclaimed it, the next bull market started. We can see we're just doing a similar thing. We broke back below it. Now it's acting as resistance, similar to the previous bear market. The other thing on the weekly time frame, this is the 2018 bear market. What we saw was the weekly order blocks acted as a top on each of the dead cat bounces. So we can see that on this order block going across, it got the next dead cat bounce top. This order block going across got the next dead cat bounce top, and also with the last bounce here from this order block. So it's not quite as clean on our current price action, but we can see this order block here was the area that we got resistance on the dead cat bounce here. We do have another order block here from this green candle, and I think this will be the top of the next dead cat bounce. This is between 43k and 42k approximately. So whether we keep going a bit lower here, I do think the next dead cat bounce will probably get resistance at this order block and would be a good opportunity for a short. Now the other thing I want to talk about on the weekly time frame is some moving averages. This yellow moving average is the 50 week, the orange the 100 week, and the red the 200 week. We can see we're pretty much at the level of the 100 week moving average at 36k, and this basically means this is the average price of Bitcoin over the last 2 years. But we can compare the previous bear markets here. So looking at 2018 bear market, we broke that 50-week moving average after initially being support. We came down to the 100-week moving average. We can see once we did break that 100-week moving average, we had that big capitulation down to the 200-week moving average, which was pretty much the bottom of the bear market. So there are warning signs here, just comparing previous bear markets. Perhaps we're going to see a big capitulation soon. And we have seen the stock market dropping quite a lot recently also. We do know Bitcoin is pretty correlated with the stock market. Just looking back at the 2014 bear market here, initially the 50-week acted as support. We broke it. Once we broke that 100-week moving average, we had one more big capitulation. We just have to watch out to see what happens here. We do close a weekly below the 100-week moving average, just to be aware that we could have a big capitulation down. So I've just copied the previous bear market here in 2018 and just attached it to our current price action, just to give a bit of a fractal of what I think might happen here. We could spend some time bouncing off this 100-week moving average, getting resistance at the 50-week, and perhaps spend some more time in between there before we see that big capitulation, perhaps later in August or September, where we can see that 200-week moving average would pretty much line up with the bottom area here at around 24,000. We do see that it does match up a bit here with these two pumps and dumps. So this will be a fractal I'm watching to see if it does play out in a similar way. And going down to the daily time frame now, we have those same patterns drawn in, but we also have added this falling wedge pattern. Typically this is a bullish pattern and we do break to the upside. We can see we did break above the upside and actually close slightly above it. And on today's open, we've just dumped completely through that, lost all the previous day's gains and came back to the bottom of this falling wedge pattern. And quite often when you see a failed breakout like this, if it does fail and come back into the pattern, we generally have a big move in the opposite direction. But we'll have to see how this daily candle closes. The bottom of this falling wedge is at around 36.8k. You can see with this parallel channel in yellow, I did think this would act as support on this falling wedge as we were coming down here. I thought we would get support on this line and then a break to the upside. Again, we do have to wait for this daily candle to close to see if it does close below this yellow trend line. Pulling up the daily EMA ribbon now. and we can see it has acted as resistance on all these attempts higher. We mentioned once this ribbon flips, it does act as stronger resistance. And we can see on 3 occasions here, it has acted as resistance as we've tried to get back above this ribbon. We did have some divergence building up here on the daily RSI. We can see we had higher lows here on all of these 3 touch points, or making lower lows on the price action when looking at the bodies of the candles. And this current candle is also lower than these previous ones, and at the moment the RSI is still higher. So we could make another bullish divergence here, would be 4 touches on this trend line, higher lows on the RSI, lower lows on the price, and this is just building up bullish divergence. I do think there's still a possibility that we do a bounce out of this wedge to the upside. But again, the stock market is really dictating what happens with the price at the moment. But there is bullish divergence building here, and we have seen that before down here at 30k. We can see we were making higher lows on the RSI all the way up here. We're making lower lows on the price. We're looking at the bodies of the candles, and then we did end up making one more lower low, which actually wasn't divergence from the previous point, but was divergence from the absolute low here. And then we got that big bounce and carried on higher. So there is a similar divergence building up. I would say this one was a bit stronger. These divergences are more significant when one of the touch points are below the 30 level here, down in this oversold zone. Currently we are in a middle range here around a 40 reading. So there is still that room to go lower. It's up to interpretation, but there is that bullish divergence building here on the price. Perhaps we see one more drop down to this blue trend line on this parallel channel. Like we did here, we saw one more dump back down, and then we got the bounce. But we'll have to see how that plays out. And over to a market cipher now. This is on the 12-hour time frame. We can see since the top of this dead cat bounce here at 48k, after our peak at 69k, we can see we have been coming down since that dead cat bounce. We've come into the red money flow, and it hasn't started to curve up again. We did just get this red dot on the 12-hour and also a blood diamond. This can indicate a big drop coming, and we have already seen a decent drop from this candle, but there could be more to come. Looking at the previous blood diamonds here on the 12-hour, this one did precipitate quite a big drop from 44,000 down to 34,000. The one after that wasn't as significant, and we actually went up after that one. And the previous one before that was quite good at picking the top here at 66k, and we did drop quite severely after that. So just another warning sign. We do have to wait for this candle to close. It will close at the end of the day. And onto the daily time frame now. We have been quite choppy here with these red and green dots. So they have been a little bit unreliable, and we'll need to look at the higher term time frames to smooth this data out. And the 2-day time frame now. We did actually have a green dot here yesterday, but it did disappear before the candle closed. So we do see this blue wave still coming down and still looking for a green dot on the other side. And the money flow is still fairly deep in the red. The 3-day time frame, we do still see this blue wave coming down and the money flow deep in the red. The 4 days quite similar, the blue wave still coming down. And with the 5-day, the blue wave is still coming down here. And onto the weekly time frame now. We did get this blood diamond on the weekly. It did get confirmed. And we haven't seen a blood diamond on the weekly time frame over the whole history of Bitcoin. So we could see this play out over many weeks here, and this blue wave is still coming down, not looking to close off yet. And the money flow did just dip into the red around the 2nd week of April. And looking back at previous bear markets, we can see the money flow only dips in the red during these bear markets. This was the 2014 bear market here. We flipped into the red around this point before we had that one final capitulation. In the 2018 bear market, we flipped into the red around this point before we had that one final capitulation. So there are lots of things lining up that we are getting close to that big capitulation. And the 2-week time frame, we did get that green dot at the end of March, but it got followed by a red dot and we continued down. And it is quite similar to what happened in 2018 here. We can see we did get a green dot as we started this bear market, got followed by a red dot. We got that continuation and this major green dot. When the blue wave crosses this white line, this indicated the bottom of the bear market on both of the 2 previous bear markets here. And we also see in that 2014 bear market, we got a green dot on the 2-week, and then we got a red dot following it. So all 3 bear markets look quite similar here, and it does seem like we are going to have that one more final capitulation. So I think that's about all. I hope you enjoyed that analysis. Again, sorry for the delay in the videos. We'll try to get back on a more regular routine with releasing the videos, as we are getting to an interesting point in the cycle. We'll have to watch this daily close here. We've had this massive drop on today's candle from 39.7 down to 36.7, coinciding with the stock market dropping 3%. And again, we would need to close back at least inside this falling wedge pattern, which would be above around 36.8k. If we do close below, we might get continuation and travel further down. And we'll also watch the RSI to see if we do continue building this bullish divergence. But we'll have to see how it plays out. So thanks for watching on Bitcoin Mamo. I'll see you next time. Bye.